What's up, ReSource Nation? Back again with us is Logan, HousingWire lead analyst, amongst many other things, and hopefully a reoccurring guest. Logan, thanks again for coming on the show, man.
My pleasure being here.
So let me set the stage because I'm really interested to pick your brain today. I read a really interesting report from CoreLogic. So give me a quick second to kind of distill a couple of articles down, and then I'm going to throw to you to kind of balance this out. So Mortgage News Daily came out last week. Scary headline, serious delinquencies set records. CoreLogic actually did a little bit more work and had a really good report. It was a loan performance report, and it was a little bit concerning. I sent it to you, and this is kind of how the call happened, and just said, hey, man, what's your thoughts? You countered back with your article. We'll post all these guys, and it'll balance it all out. But if you read those reports, there's a couple scary points made. I want to make them real quick. We'll throw them to Logan in a second. So 5 months into the pandemic, this is from CoreLogic, the 150-day delinquency rate for August spiked to 1.2%. That was the highest rate in more than 21 years, double that of January 2010 during the peak of the home price bust. The spike in delinquency was all the more stunning, they wrote, given the generational low of 0.08% in March and April. Another statement in that same article, looming unpaid mortgage payments paired with sharp declines in income for many families point to a potential wave of home sales triggered by financial distress in 2021 as forbearance periods end. And the last one, I'll throw to you in a second, forbearance programs continue to reduce the flow of homes into foreclosures and distressed sales, and has been to the key to helping many families who have been particularly hit hard through the pandemic. Even though foreclosure rates are at historic lows, the spike in 150-day past due loans point to bumpy waters ahead. Now, in other words, and that was the CoreLogic president, he's basically saying, hey, we're kicking the can down the road, and he believes foreclosures are coming. Logan, on the other side, has a different perspective, different point of view. He's got an article. We'll obviously post that below. Hey, bud, tell us why you're not so concerned and kind of help us distill all that down.
Well, if I remember right, CoreLogic had price declines starting from May of this year.
Good point.
So that's with it's so much different this time around. And the forbearance, obviously, for a lot of my work is to kind of take the housing bubble boys out because they're more of a conspiracy theory. Probably the worst, or one of the worst economic groups we've ever had in modern day history, the bubble 2.0 people. But the forbearance, I moved into the forbearance crash bros. What they used to talk about is unemployment rates going to 20, 30%, forbearance going up to 15 million. It went down every single month since June. We're under 3 million. Most likely forbearance is going to be extended for 2021 because it's such a successful program. But even if that wasn't the case, you have a much different market. You have rising demand into 2021. You have rising home prices into 2021. In 2005, that's when kind of housing demand peaked and purchase applications started to go down all the way down to 2008. You had an over-leveraged credit bubble. You have nested equity, especially from home buyers from 2010 to go into 2017. Now we can make that 2018 since it's another year of home price growth. So this notion that this was going to be the 30 to 50% price declines in 2020 moved to 2021, not going to happen. And most likely they're just going to extend it, which means that all the jobs that are being regained, right? More than 12 million jobs have been regained. Once those people get the income, most likely there's going to be a delay into getting off of forbearance. So as time goes by, as the months go by, more and more people are coming off of forbearance. And this is one of the reasons why they're probably going to extend this all the way out to 2021.
So just to be clear for realtors, consumers watching, when he says extend this, you're meaning forbearance programs?
Yeah, forbearance in total will probably be extended all the way to the end of 2021. If President Biden gets to be president, or even if Donald Trump becomes president, most likely
probably either way, right?
Yeah, either way, they're going to extend this. We had a lot of speculators on bad debt in 2002 to 2005. These are homeowners. That's one of the things I try to emphasize. These are people who want to stay in their homes. So if they have the incomes and they qualify, everyone was able to qualify for the debt they got. Once they get that income back, most likely they're going to push it. It's going to take time, actually, the whole process of doing your loan modification, moving the payments to the back end of the loan. Then you get off of forbearance. So I think there's going to be a real lag period from this number, this total number that was, started, people thought this would go to 10 or 15 million. It's under 3 million, most likely probably going to go under 2 million. And another year where prices aren't declining, where equity is rising, forced income selling, yes. Some people just aren't going to get their jobs back and they maybe want to move for different areas. Those people will sell their homes, but nothing in the velocity that some of the big housing bears who whiffed terribly in 2020, who are going to whiff terribly in 2021, was hoping for. And it just didn't occur this year. It's not going to occur next year.
So you're really strong. You have been really strong on housing. Any realtor, any mortgage professional loves to hear that, right? Like that's good news for them. Homeowners love that as well. When does that run stop? Does it taper off? Like, what does that look like? And also, are you concerned with like a second possible shutdown? A lot of signs point to that. And what happens when those incomes, are removed again?
Here's the thing. The fear of the virus was just as prominent as the downdraft in purchase application data. We've had cases rising 2 times now, and the bond market doesn't react negatively. Purchase application doesn't act negatively. And the people that got impacted the most were people that have renter financial profiles. That's where the stress is. That's why, if there is no more disaster relief, that is the area where you'll see the most pain. Homeowners are much different this time around.
Can you spend more time there? I'm sorry, that was a really interesting point. Can you spend more time on the pain part of that?
Well, majority of the people that lost their job were tied to service-sector jobs that are typically, the income profiles are those for renters, not homeowners. And also, 12 million jobs have come back. So we're 10 million out from going back to the BC level. Every month, we're going to create more jobs. But a lot of this is almost renter income is going to come back, not so much of homeowners income. In fact, I would speculate that I'm not even sure that 4 or 5 million forbearance number was even legit. I think some people just took that because they thought, hey, listen, just like everyone else, everyone was freaked out in March and April, right? Nobody knew what they thought. Hey, forbearance, I'm just going to take it. And now, you know what? I don't need it. Let me get back out of this. And some of these people are actually starting to refinance their mortgages.
Right. Real life follow-up question. I'm sorry, this is really good stuff. I keep interrupting you, but this is good stuff. I want to slow down and distill it more. Real life follow-up question. So I'm looking at rentals right now, multifamily. With that in mind, what you just said, should I pump the brakes? With the rents being a concern, some people think that, if you believe CoreLogic, you believe that there may be deals to be had in the future. How would you advise somebody in my position where I'm looking at rentals?
There's going to be opportunity next year. Regardless of how successful the forbearance, you cannot take an economic shock like this and have no damage, right? It's just impossible. You can't have 100% clean slate. So there's going to be deals in certain areas of the country that could be had. General, not what people want to expect. A lot of people's business models are based on interest rates rising, recession happening, job losses, foreclosures. We save all our money, we buy then, and then we resale out or rent out. That hasn't happened, right? That most likely is not going to happen in the scale that people want. But again, so much of the income lost was also supplemented with the CARES Act. If you actually look at disposable income, it has been higher the entire time during this crisis and still higher today. If you look at savings rate, still higher today than it was. So we kept things at bay. I think the issue for next year is if for some reason we do not continue disaster relief, right? We do not facilitate aid and money, there's going to be certain people that just won't be able to handle their rents. And some people certainly won't be able to handle their mortgage payment, but not in the scale in terms of homeowners. Renters, that's a different ballgame altogether. And that's why disaster relief is such an important thing, because until you can walk the earth freely, the U.S. economy cannot run at full capacity, right?
Right.
So you just need, and that vaccine is a few months away. By the time we distribute it out, get everybody back up running again, it's going to take some time. So from here to there, we can easily cover enough income to get us past the vaccine area. So it depends on execution at this point.
Gotcha. How do you feel about a possible shutdown? Do you think that's coming? Like a national shutdown?
We actually never really had a pure national shutdown. There were parts of the area that were always open. I don't think they can pull off a national shutdown policy. I think they can try to do exactly what Texas did. Texas had rising cases. They ordered a mask mandate. They shut down a few restaurants and bars. That actually will stop the curve, right? It'll stop the rise, and we'll be able to curve cases down. A national shutdown, I don't think is even feasible. So I'm not really concerned about that. But if there was kind of like what Texas did, a kind of a mask ordinance and making people kind of be leery and mindful of it and prevent big gatherings in indoors, that should be able to get the trigger. Because the winter was always the area of concern for me. If you look at a lot of my work this year, I always talk about winter, be careful winter. Why? Because we're following the Spanish flu. It was the winter time where they actually increased. We're starting to see that now. A lot of it's in the Midwest. But if we could just get back these 2 to 3 months to just slow the rate of growth down, I think you won't see a national shutdown. Plus, also the fear is not there. We're not afraid of the virus like we were in April or in March, because we didn't know what was going on. People were, again, I always will reference this, baby carrots. I got baby carrots for my tortoise at Albertsons. I was surrounded by people who looked like they were going to be in a winter storm for a year. Nobody's doing that anymore, right?
True.
Nobody is going, nobody's hoarding toilet paper, nobody's freezing up like they did back then. That is where you would be concerned about the economy. If people all of a sudden froze. I don't think people are not afraid of freezing. The bond market is telling me people aren't afraid. The stock market is telling me people aren't afraid. We still have higher income levels with the CARES Act, and we still have higher savings rate. So I'm not afraid of this wave as everyone was the first time. Because remember, we were like in February, hey, life is great, economy is going well, and all of a sudden, hey, guess what? There's a global pandemic. There's a virus here.
Right.
To kill you. Unless you replicate that, which I think is impossible because of time, right? Time. We know what's going on here. I don't think it could have a damage to the housing market like it did. I mean, we had purchase applications were growing double digits all the way to March 18th. And then we had 9 weeks. Pretty much after the 5th week, purchase applications started to come back, which means by the middle of May, it was over for the housing bears out there. They just didn't know it yet. So we're not seeing that. What I do think is going to happen with housing data is basically things are going to moderate, because some of these charts went parabolic. Housing charts do not go parabolic, right? It's just a function of having kind of a deep contraction and a sharp rebound. It's going to moderate. And when it moderates, don't overreact to it. Because I just saw, like, we just had the second best pending home sales in the 21st century. And people, the cracks in the housing market. So you have to be mindful of doom and gloom headlines for housing, because that's how the operation goes.
Yeah, I mean, to oversimplify it, and I know this is, geographically, sensitive, but man, demand is through the roof, and I'm not seeing that slow down anytime soon. But that's oversimplifying quite a bit, but demand is through the roof.
And there's really one simple model to kind of follow. If demand was really falling, purchase applications would be down 20%
Right.
year, similar to what we saw in 2014. 2014, we saw purchase applications on trend down 20% year over year for a year. It didn't crash the housing market, but it impacted demand for the existing home sales market. The rate of growth of purchase application is going to fall. It would be running at 20% on average for 25 straight weeks. We simply have not seen that since 2016. When the rate of growth falls, it does not mean a crash or anything. It just means that we're probably going to go back to the single digits, working from going to be 12-year highs in demand going into 2021. So just be mindful of that when you read headlines, because I still see these red lines. One little miss of the data, here it comes, here comes it. No, there are models to follow to give you a light going out in the future. And this is how economics is really done. Terribly boring, I know, but
right.
Guidelines of what to think about.
What was interesting, and I'm sure you saw it because you play stocks well, and we'll get to that in a second, but is after when Biden was kind of announced as the winner, presumed winner, we'll see what happens, the home builder stock prices dropped, and that was weird to me because demand's so high. Like in my area, all we need is more homes. So it was weird to see that the prices dropped.
There's one thing with the builder stocks. I rarely talk about stocks. I hardly never write about it. But on Twitter with the builders, just because it's housing, when Toll Brothers went under 17 on my Twitter account, I said, buy. Hold it until 39. When it gets to 39, I'm out. I don't touch the builders right now. Why? They get overbought, they get oversold. What happens with the builders, and this is going out in the future, when the economy gets better, mortgage rates rise. When mortgage rates rise and bond yields rise, builders lose a little bit of their luster, right? It's just a function of demand. Since they get overbought and oversold so much, if you see the builders not performing, it's most likely because yields are going up. And we almost got to that 1% 10-year yield that I've been talking about all year long. We got to basis points. Be mindful of that with builder stocks. And I got that question a lot. You got out of your builder trade, and now they'll be okay. But if you're trying to like really time them, they get oversold, overbought a lot, and if bond yields rise, they get priced a little bit differently.
Yeah, and the bonds and stocks have performed well post-election. In my opinion, from what I know, the market loves predictability and hates volatility. So if you have a Biden presidency and you got a Senate and there's a little bit of gridlock, that kind of points to predictability, not a whole lot of change. So in my opinion, I think that's why it's performed well.
Corporate taxes are going to stay low.
Right.
Spending is still going to be there. And you're also working from an economy that is not running at full capacity. And once that vaccine was announced and the effective rate was over, you saw how the market reacted. Remember, we have another wave of people and income coming, right? So think of this: savings rate is still higher, income are still higher per capita income because of all the fiscal disaster aid that we gave. And then if we get that vaccine distributed out, then you're going to have another wave of people getting jobs, because that's what labor will be needed after that point. And then you have more income, more people working at that point. So the economy could be partly overstimulated for a second once you get the vaccine out there. But it was a good backdrop if you didn't believe in the second depression, that kind of mindset. And that's why the AB America model was created on April 7th, to give people a pathway to recovery in 2020 and not fall into the prey of, we're never going to recover again, things are horrible. We did that after the great financial crisis. It didn't work out well. It wasn't going to work out that well here, but here at least we can document it and show people what to look for in economic cycles.
Yeah, last question, and then I have some actual rapid fire questions we'll end with. But you do really well with stocks, and I'm curious, prior to the pandemic, 10 years ago it seems like, but prior to pandemic, everybody it was widely accepted that we were going to go into a recession year. Like, we had expansion for longer than ever. That hasn't happened. What's your thoughts? Is this run going to continue? Does it flatten out? Do we ever get to a recession?
Well, recessions, if you take the exogenous shock of a virus out of there, they're kind of not that difficult to see coming, because how economic data is typically sticky. Recessions, you kind of see them, leading economic indicators fall. You have an inverted yield curve. There's all these different factors that typically go into recession. Here, January and February, economic data was good. I mean, really good, even much better than I thought. And then all of a sudden, guess what? True. So you're dealing with a high velocity event that's creating high frequency data. So you have to kind of be mindful of that. But you got to remember, we had no consumer credit bubble going into this. This is one of the reasons why I was really bullish in 2020. You have good demographics. You have we have rates very low. We have inflation low, and we have household formation. Household formation is like the king dollar of the United States.
Yep.
Where other countries do not have a massive young workforce. We do. We have the millennials, we have Gen Z, right? Those two together are bigger than the country of Japan's total population. They need shelter, food, services, so it can keep the growth kind of going, where other countries simply don't have that kind of capacity. So once you get the vaccine out, once you get people be able to walk the earth really, then you could go back to a traditional kind of economic cycle and work with things. But you've got a Fed who's not going to raise rates for a long time. You've got fiscal disaster relief in the system, and then most likely after that, you probably get a stimulus after that. So it's good. The backdrop is good going into the future, but you need that vaccine, you need that better treatments. Once you get that, because there's certain sectors that simply cannot operate at anywhere near full capacity. And as long as we give disaster relief every month until that happens, we'll be okay. You pull that out of the equation, right? Businesses go out, incomes fall down. That is where it becomes problematic. So it's all about execution, and it's the politics game, right?
Well, I just can't see that happening on either side where they pull away disaster relief. That seems so unlikely to me.
Wouldn't think so, but never underestimate politicians.
Never underestimate 2020.
It's one of those things, but I mean, the backdrop is good because we still need so much labor. We just don't need it now while the virus is infecting and killing people every day. And once these things take off, especially in the winter, they have the ability to 160, 180, 200,000 cases a day. We can control that, just a little bit of discipline, and we should be okay. As long as we have disaster relief, people aren't frozen. I think that's the main thing that I remember most about 2020, just on the economics. People froze, in March and April, and then all of a sudden, hey, I'm still alive. I got my job. The majority of the country was still working. The other people that did lose their job, they got enhanced benefits. You had a disaster stimulus check put in. You have all these things that could help us get to that side. That side, that next level, is that vaccine and better treatments, because then game's on, right?
Yeah.
The convention industry, the airlines, cruises, travel, oil, all these sectors will get a boost just because of certain industries will be able to work at a higher capacity than what they did with no vaccine and no treatment.
Good stuff, man. I love it. That's exactly why I brought you on. Guys, we're going to post all the links, and I encourage you to read both sides and then kind of figure out what you believe is going to happen moving forward. I think Logan made some amazing points. The CoreLogic report is scary, but again, we'll post that below.
And just remember, the housing bubble boys who have been wrong for 8 years never had a global pandemic in their model, right? They don't believe in economic models. But even with the greatest economic shock, the United States housing market outperformed the world. Why? Housing is driven by demographics and mortgage rates. These two things right now are the best in the history of America. So you have great replacement buyers. That's the main thing. If I want to get everyone out there, it's we have replacement buyers. If you get people moving up, moving down, that just adds more demand to it. But you have the biggest replacement buyers ever in history with the lowest mortgage rates history. Don't make it any more complicated than that, right?
Yeah.
Those two are here for about a 5-year period, 2020 to 2024. After that, we'll deal with that later. But this period, not bad. You have stable demand for a few years here.
That's a great way to simplify it. Let's have some fun. We'll close with some quick fire questions. You ready?
Sure.
Rates over under 4% next year.
Under.
Home prices over under 5% appreciation.
Under.
Shutdown. I think you kind of already answered this one. Are we going to go national shutdown? No. Unemployment rate rise or fall next year?
Fall.
Man, you're quick on the draw. I can't even get to these questions. I didn't give them these ahead of time, guys. Who's the head of the CFPB under Biden? Ooh, I got him.
Robert Hackett.
Oh, not Cordray.
I'm not going to say Cordray.
Not going to say Cordray.
Nobody probably knows who Robert Hackett is. Right?
The new mortgage IPOs, stocks increase or fall next year?
Probably 70% of them decrease.
Makes sense. The Biden home buying tax credit. Good idea, bad idea?
Terrible idea, but might get through.
We could unpack that one on our next call, for real. Last one for fun, Super Bowl winner.
Kansas City Chiefs.
Oh, that's too easy. Let me take that one away. If you couldn't pick the Chiefs.
If I couldn't pick the Chiefs, Tennessee Titans.
Yeah, they're strong. It's gonna be fun.
We might COVID could be rampant. And we might.
Yeah, who knows? Derrick Henry gets COVID, during the playoffs. It changes everything. That's why I said in the green room, there's going to be an asterisk next to the Super Bowl winner this year. We'll see. All right, man. Thank you so much. Awesome. And guys, you got to follow Logan, man. His stuff is on point. Follow him on HousingWire, Twitter, Instagram. He's got his own website. We'll post all that stuff below.
And gold bugs and anti-central bank are just trolling grifters. Just remember that. Don't believe the hype. They've been wrong since 1913 about America. They'll be wrong until the afterlife.
Just wanted to sneak that in. I love it, man. Thanks again. See you next time, guys.